Hi, and welcome back to the Independent Investment Banking course. This is lesson number 9, Understanding the Financial Needs of Corporate Issuers. So we've already discussed in the last lesson origination. So we're doing a little bit of a deep dive on, hey, now that we have done our market analysis, we've done our industry and sector and subsector research, we've delivered research to corporates, etc., built some trust. We now have the opportunity to engage in discovery or needs analysis. And so discovery and needs analysis is something that, senior bankers will do with clients to really get an understanding of, where they're at now, where they're trying to go, and help to start figuring out or solution mapping potential products and strategic alternatives that will close that gap for them. Okay. So the needs analysis portion is going to be the discovery in order to find out where they are now and where they're trying to go. So in terms of understanding financial needs, there's an importance for investment bankers that must understand these needs of corporate issuers to provide effective and tailored financial solutions. This understanding enables bankers to align their services with specific goals and constraints with each corporate client. And so in terms of what we're going to be discussing, it's assessing the financial position, reviewing historical performance, evaluating growth plans, identifying capital requirements, considering industry dynamics, and conducting due diligence. So in terms of assessing a financial position, we need to analyze financial statements. So investment bankers, they examine the issuer's balance sheet, income statement, cash flow to gain a comprehensive understanding of the current financial health. Balance sheet reveal issuer's assets, liabilities, etc. We'll go into more accounting type stuff a little bit later in the course. But suffice it to say, we need to understand where they're at now from a financial perspective, examine financial ratios that are outlined here, and then ultimately identify constraints and opportunities, such as high debt levels, low liquidity, declining profitability. Conversely, it highlights opportunities for improvement, such as optimizing working capital, improving cost management, leveraging underutilized assets. So what we're doing is we're reviewing historical performance. So we're understanding past performance, analyzing the financial data to identify trends and growth patterns in the issuer's business, year-over-year trends, cost trends, profitability, all that good stuff, and then evaluating revenue generation. So assessing the issuer's ability to generate consistent revenues, including looking at sales data, market share, customer acquisition, retention rates, etc., and potentially identifying risk and challenges as well. So as a trusted advisor, we have to understand what are potential risks, whether it's regulatory, operationally, etc., and also potential future issues and plan accordingly. So now that we understand where they're at right now, where they've been, we can start to lay the foundation of where they'd like to go. So this means understanding their strategic vision and reviewing their business plans, market analyses, management presentations, all of that good stuff to understand the mission, vision, strategic initiatives aimed at achieving growth, that strategic plan that's happening on an annual basis. So we then, analyze their expansion strategies, whether it's new product launches, geographic, expansion, potential acquisitions, all of that good stuff, and understanding the feasibility and potential impact of these strategies. Once we understand where they're going, we can start to solution map, financial solutions to those growth plans, such as equity, for expansion, debt for financing for acquisitions, and then structuring transactions to support these key initiatives with the capital necessary. So when we're talking about identifying capital requirements, detailed discussions with executives happen. We need to understand exactly specific capital needs, including immediate and long-term financial needs. And we also need to understand specific project needs. So upcoming projects such as, working capital, debt refinancing, potential acquisitions, etc. And then we start getting into the solution mapping where we're proposing financing solutions, issuing equity to raise funds for expansion, issuing debt to refinance existing obligations. And then we also need to just make sure we're considering industry dynamics, such as market trends that are happening, and providing strategic advice on how to navigate those market challenges, as well as the industry impact that could potentially happen. We also need to engage in due diligence, comprehensive review of the operations, management practices, organizational structure, operating efficiency, identifying potential risks such as legal, regulatory, operational, and then propose mitigation strategies for them. So we've already discussed assessing financial position of where they're at now, where they've been, really, at the end of the day, we need to do a detailed analysis of the financial statements to assess their overall financial health. Ratio analysis we already talked about, and identifying areas for improvement. And then reviewing historical performance, just an extension of that, really getting to the performance drivers or value drivers, with regard to the financials, and then really seeing where those are going from a trend standpoint. So just in conclusion, really we need to, as a senior banker, you need to understand where they're at now, where they're going, and then be able to solution map the capital and strategic alternatives accordingly to help them realize their strategic goals. And so that's what we're talking about here in lesson 9. Stay tuned, guys. There's a lot more to come.